in the post-retirement income, we foster a sense of inclusivity and create a more equitable society for our public servants and their dependents. Today, as we gather under the theme, Building a Secure Future Together, let us recommit ourselves to transparency, accountability, and good governance. These principles not only guide the operation of the Public Service Superannuation Scheme, but also align the general motto of pension schemes worldwide, which is to safeguard our well-being and the prosperity of our members. Through our collective effort, we can build a strong foundation for the scheme and set the standards for excellence within our borders and beyond. I would like to express my deepest appreciation to all the stakeholders present in this annual general meeting, both physically and virtually. I also wish to recognize the vital role of the Board of Trustees has played in the success of the scheme. Your collective commitment and dedication are instrumental in building a secure future for dedicated Kenyans in the public service. Let us seize the opportunity to reflect our achievements and raise challenges and explore new avenues for growth and prosperity. Together, we will continue to build a prosperous and secure future for our public servants and for Kenya as a whole. Thank you, and may this annual general meeting be a hallmark of bright future for the scheme and for Kenyans as a whole. God bless you. God bless Kenya. Asanteni.
Thank you very much. Asante sana. That's the speech by the PS. We want to thank the PS, James Mahati, for that speech, and of course the presentation by Agnes. Thank you very much. Now we're getting to a very critical stage, and that is a presentation of reports, and we'll start with the financial statements of a scheme for the year ended 30th June 2022. To do that is Joseph Rono, the Group Executive Director, CPF Financial Services. And because this report is being uploaded on the portal, we request you to be very fast. Much of what you present will be available on the portal. Karibu sana, Rono.
Thank you, MC. The PS, in his absentia for State Department for Economic Planning, Chairman, Board of Trustees, both present physically and virtually, our regulator, fellow service providers, distinguished ladies and gentlemen, good afternoon. Yes, so I'll run you through the financial statements for the 18 months period ended 30th of June 2022. And just to mention that part of the responsibility as anchored in the Retirement Benefits Act of the administrator is to help the Board of Trustees keep what we call proper books of accounts. So we did keep books of accounts, and the same was subjected to audit. So I'll run you through the financials, and then the auditor will give his audit opinion. So if you have the booklet with you, I want us to turn to page number 25. Page number 25 is a statement of financial performance. For a typical, if it was a company, this will be the P&L. This is basically the scorecard in terms of how we've performed during that financial period. In terms of, if you can go back to the previous, yes, the person who is running us through the slides. Yes, if you look at that particular page, the revenue attributed to members, this is basically contributions received from our members, was 41,418,455,563. The investment income which was earned during the period, it's been captured in the report as finance income, was 2,892,087,648, which when you sum the two gives us the total fund balances as at end of that period of 44,310,542,211. If we can turn to the next slide, this is basically a statement of financial position. Sorry for that correction on your booklet. It's not financial performance, but financial position. For a typical company performance, this will be the balance sheet. It shows where the figure of 44 billion we've read in the previous page. The question is, where are these assets? So we can confirm that in terms of the investments which were undertaken during the financial period, we did invest in a current investment of 35,973,149,438. Receivables from exchange transactions was 8.3 billion. This was basically contributions which fell due during that financial period, which was paid after the end of that financial period. And then we had cash and cash equivalent of 28 million shillings, thereby giving us a total value of assets read in the previous page, supporting the member balances of 44,310 shillings, 543,211. If you turn to page number 27, that is not captured in the slides on the screen. This is basically a statement of cash flow. If you can move, yes, this is a statement of cash flow. It's actually on page number 28. And just to mention, ladies and gentlemen, why this report is very important. Normally, the transaction which is captured in the cash flow statement may not necessarily be reflected in the first two statements, which I have not mentioned. So it splits the cash flow movement during the financial period into three, but in our case, there are two main activities which was happening. One was cash flow from operating activities, where we received contributions of 44.3 billion shillings. This is both contributions, both received and receivable. And then the contributions which were receivable was 8.3 billion shillings, thereby giving us net cash from operating activities during the financial period of 36 billion shillings. And then, of course, the activity of the scheme is when it receives money, it has to invest that money. So that money is captured under cash flow from investing activities. And as such, we did purchase treasury bonds of 35.9 billion shillings during the financial period. So the amount of money which was in the account as at end of that financial period was 28 million shillings. So as such, you can see we received 36 billion, we invested 35, so 28 billion shillings was outstanding in our account. The other important report, which is there or is on page number 29, just a comparison in terms of the budgets which the Board of Trustees had put in place when compared to the actual performance. And I want to mention that there were two main areas where we were comparing the actual budgets which were provided together with the actual performance, and this is on contribution. The board had made a provision for a budgeted contribution of 38.5 billion shillings, but we did receive 41.41 billion shillings. There was a positive variance of 7.32%. And the reason for that particular variance is that there were a number of employees who are converted into, who are on contract basis, who are thereafter converted into permanent and pensionable basis, thereby becoming pensionable and members of public service superannuation scheme. And that explains why we have that variance. And then on investment income, the board had projected an income of 2.5 billion shillings, but they managed to outperform that particular budget by generating 2.892 billion shillings, hence a positive variance of 15.68 billion shillings. Perhaps after this, you definitely need to clap for your trustees, is the reason why Chair has declared a significant return for the members because they've been able to perform what they had projected during that financial period. So the rest, ladies and gentlemen, are just notes in support of the financial statements. And thank you very much. That is the report for the 18 months period ended 30th of June 2022. Thank you.
Let's clap for Rono once more and doing a fantastic job in terms of management of time. Up next is the report of the auditor. So the person making the presentation on behalf of the auditor, tumpigie makofi. You have your 4 minutes.
Thank you, MC. My time here is dictated by the length of the report, but I will try as much as possible to restrict myself to only the important parts. This report is found on page 1 of your annual reports. So the chairman, members of the board of trustees, the acting CEO, secretariat, distinguished stakeholders, including the fund managers, custodians, scheme administrator, members present, both physically and virtually. Good afternoon. My name is Samuel Mushiri. I'm a Deputy Director of Audit in charge of external audit services for the National Treasury sector, and I'm here to represent the Auditor General, or the Office of the Auditor General. So I will read the report, but I will restrict myself to just the opinion and conclusions. The report comes in 3 parts. That is the report on the financial statements, report on lawfulness and effectiveness in the use of public resources, and lastly, report on effectiveness of internal control, risk management, and governance. So I'll start with the report on financial statements, and I'll read as the Auditor General herself. In my opinion, the financial statements present fairly in all material respects the financial position of the Public Service Superannuation Fund as at 30th June 2022, and of its financial performance and its cash flows for the period then ended, in accordance with the International Public Sector Accounting Standards, IPSAS accrual basis, and comply with the Public Finance Management Act 2012, Public Service Superannuation Scheme Act 2012, and the Retirement Benefits Act 1997, which was revised in 2020. So I now move on to the report on lawfulness and effectiveness in the use of public resources. As required by Article 229(6) of the Constitution, based on the audit procedures performed, except for the matter described in the basis for conclusion on lawfulness and effectiveness in the use of public resources section of my report, I confirm that nothing else has come to my attention to cause me to believe that public resources have not been applied lawfully and in an effective way. So I'll read the basis for that conclusion because I have stated there is an exception there. So basis for conclusion, unremitted pension employer contributions. The statement of financial position, and as disclosed in note 4 to the financial statements, and has been presented here, reflects a balance of 8.3 billion in respect of receivables from exchange transactions, which includes an amount of 7.8 billion in respect of employers' contributions due as at 30th June 2022. This is contrary to Section 8C of the Public Service Superannuation Scheme Act 2012, which states that not later than 10 working days after the end of the month in which contributions are due, the government shall remit an amount comprising of the members and the government's contributions to the custodian. As at the time of the audit, which we carried out in February 2023, and which was more than 7 months after the contributions became due, out of the balance of 7.8 that reflected in the statement of financial position, only an amount of 4 billion had been received, leaving a balance of 3.8 billion unremitted, and unless it is paid together with the penalty provided for under Section 6(2) of the Public Service Superannuation Scheme Act 2012, contributors stand to lose returns that would have been earned had the contributions been made or had they been received in time. In the circumstances, therefore, we found that management was in breach of the law. I happen to be in the same premises as management and secretariat of this scheme, so I've been talking to them about this. They say the situation has been improved. Has improved. Maybe they can clarify. Report on effectiveness of internal control, risk management, and governance. As required by Section 7(1) of the Public Audit Act 2015, based on the audit procedures performed, I confirm that nothing has come to my attention to cause me to believe that internal controls, risk management, and overall governance were not effective. There was no exception in that report, so we found everything to be okay regarding effectiveness of internal controls, risk management, and governance. So this report is signed by CPA Nancy Gadongo, CBS, Auditor General, Nairobi, 8th March 2023. Once again, I thank management for the cooperation that they accorded our team. Thank you, Chair. That will be all.
Going by your threat earlier, and the length of the time you would take would depend on the reports and the time you've used. You're a good gentleman. Tumpige makofi. Thank you very much. Ladies and gentlemen, I think at this point we need a proposer and a seconder for that report. So again, we need a roving microphone for that. I think there's Jamhuri. There's a gentleman called Jamhuri. Oh, okay, at the back there. Give them the microphone.
My name's Jamhuri Labarakwe. I propose.
Thank you. Let's appreciate Jamhuri. Then we need a seconder. Daktari, go ahead.
I'm Dr. Samson Momo, a member of the scheme, and ideally second the audit of the report. Thank you.
Fantastic. Let's appreciate ourselves. We're making some very good progress. Now, ladies and gentlemen, allow me to bring Steve Biko, the General Africa Asset Managers, and they have a presentation of the fund management report. Tumpigie Biko makofi. Hivyo ndio mnapiga makofi, ni njaa.
Thank you very much. The Chair, the Board of Trustees, ladies and gentlemen, all protocol observed, good afternoon. My name is Steve Biko from Gen Africa. I'm the Chief Investment Officer. It is our privilege to be here before you in this inaugural AGM for the PSS scheme. Please accept our gratitude and greetings from the board and management. As an esteemed client and as your service provider, I'd like to mention that we have been long serving in the market. We are regulated by both the Capital Markets Authority and the Retirement Benefits Authority as fund managers. And in our role in carrying out responsibilities, we advise the Board of Trustees on how to make investments as stipulated under the regulations. So we simply make the investment decisions, but do not handle the funding. The records are also managed separately by the administrator. In light of that, just looking at the economic and investment environment under which we operated, 2021-2022 was a challenging period, as already mentioned by the Chair in his remarks. Nevertheless, we saw the fund performing strongly. We had a GDP growth of 4.8%. That was lower from the 7.1% of the previous year. We expect that 2023 will have a GDP growth of about 5%. Again, in looking at other key important aspects of the environment under which we operated, we saw a weakening of the Kenya shilling in that particular period by about 9.3%. Nevertheless, we have since seen some sort of stability in this particular period. After that slight depreciation, and a lot of that also was impacted by the demand for foreign currency within the local market. Other key drivers such as inflation continue to be a challenge. We have just seen the prices for energy being read out and have continued to increase. Nonetheless, continue to position the investments in tandem. We have seen interest rates increasing. The return that was read out is as a result of where the investments are made. And we have seen as interest rates increase, we position accordingly with rates of close to between 13 and 15%. The stock market also has indicated a very challenging period, but this fund, being conservative at the moment, doesn't focus very much on the stock market. We really focus more on the fixed income side of investments to cater for the need of the fund, both in terms of liquidity and also the long-term investment requirements. Looking at the fund itself, we closed the period of June 2022 at 44.3 billion. Subsequently, into 2023, by way of update, the fund is already up at 78 billion as at the close of May 2023, and as we speak, up to 78.5 billion. So there has been tremendous growth in the fund, and the investments continue to yield positive returns. In terms of outlook, we continue to monitor GDP growth, as already mentioned, inflation and the interest rate movement in tandem. I'll continue to look at in terms of how we position the investments of the fund. We understand where the currency has been moving, but currently the diaspora remittances that we have seen and also funding from various partners of the country has led to stability in recent time, and so we continue to look at that and the impact that that will have on the fixed income side of things. So in terms of strategy, just to mention in finality, is to look at diversification of the portfolio. We have been very strong in the bond investments, currently looking at pushing more into the treasury bill space, and that will lead to optimization of the return for the portfolio, and also looking at the current market cycle to see how best to position. With that and those few remarks, thank you very much, Chair, Board of Trustees, and to the members present. Thank you.
Thank you very much, Steve. And I think you guys are not appreciating yourselves the way it should, because, I mean, you have recorded successes from the reports you can see. Let's also appreciate the Board of Trustees for a job well done so far. All right. Now we want to go to the custodian's report, and Janet Waiguru is already here. Karibu, Janet. Tumpigie makofi. We can do better, surely. Karibu sana, Janet.
Chairman, Board of Trustees, trustees present physically and virtually, members of the scheme present and also present virtually, our representative from our regulator, Retirement Benefits Authority,
fellow service providers, distinguished guests, good afternoon. We, as your custodians, are honored to be part of the inaugural AGM. Please allow me to introduce the other custodian banks who are present, and I will start with Ms. Eva Bore-Mwangi, who is the General Manager and Head of Custodial Business at NCBA Bank. She is joined by Purity Huha, Mr. Eden Kaberere, who is the Head of Investor and Custodial Services at the Cooperative Bank of Kenya, and myself as Janet Oigoro, Head of Investor Services at Stanbic Bank. You will be delighted to note that as your custodian banks, we are licensed by the we have three regulators. That's how many there are. So our principal regulator is the central bank as commercial banks, the Retirement Benefits Authority as to be able to offer these services to pension schemes, and the Capital Markets Authority. So our role as the custodian is to ensure safekeeping, and safekeeping primarily means ensuring that the assets of the scheme are safe. In whichever investment that the fund manager undertakes under the instruction of the Board of Trustees, we are required to ensure that those are held securely. We are also required to ensure that we provide the segregation and independence of the assets of the scheme, both from the scheme sponsor, from the board, and from the other service providers. So it is therefore our responsibility to ensure that we have segregated accounts for this scheme to hold the assets, and we work in partnership with the fund manager to ensure that as they undertake those investments, we are able to ensure the delivery of the funds and the delivery of the funds in as far as settlement is concerned, and receiving the assets that have been procured. It is also our responsibility to ensure that we file returns to the regulator. Again, this just ensures that there are checks and balances in reporting to the regulator in terms of the funds. And to be able to do that, we must ensure that we have measures within our organizations to mitigate the risks that are attached in the investment process. So even as we stand here as your custodians, we have a team that works with us to ensure that we provide segregation of our duties in ensuring that no one person can undertake a transaction from beginning to the end. We also ensure that the assets are registered in a nominee name, and this also ensures that there's segregation between our respective banks' assets and those of our clients, such as yourselves. We undertake quarterly reconciliations, monthly reconciliations, and also quarterly reconciliations to the other service providers to ensure that any difference, if at all, is explained to the Board of Trustees. And it is also our responsibility, as I mentioned earlier, to file returns to our regulator, which then they are able to compare back to the other returns that are filed by the other service providers. We also work hand in glove with the auditors of the scheme to also ensure that we are able to account for any money that you're contributing in as far as the assets, the investments of the assets, and how the funds have been invested. So as we look at the period that we are reporting on, we'll just give you a view of the assets that we held as at 31st of May. If we can move to the next slide, please. And you can see that the scheme assets are distributed to the three custodian banks, and on aggregate, we had about 77.7 billion in our custody. Thank you.
Thank Thank you, Janet. I was just wondering whether it's banking jargon to say you're working hand in glove, because what we are used to is working hand in hand. Now, working hand in glove is a new one. But anyway, let's proceed. George Okioma is the CPA Financial Services Director, Operations and Marketing. He's going to be doing a presentation of the administrator's report. Let's appreciate him as he makes his way here. George.
Thank you. Chief guest in absentia, Chair, Board of Trustees, the members, fellow stakeholders, RBA representative, members present, and those who are watching us virtually, good afternoon. I would want to take this opportunity, first of all, to appreciate for the opportunity to share with you in this inaugural occasion the report of the administrator by CPF Financial Services. We are registered by the Retirement Benefits Authority to offer administration services to pension schemes. And we want to confirm to you that during the period for the 18 months, which is under reporting, we offer those services to the scheme. We want to just take you through, MC, just in a few minutes, what is the role of the administrator. Largely, we are the ones who are member-facing, and any issues touching on members will many a times come to us. Our role as the pension scheme administrator is to keep records. When those payroll schedules are done, they are sent to us for purposes of keeping record. We maintain that record from the day a member is employed or the day a member joins the scheme until such a time that the member exits the scheme. You exit either through retirement or through resignation or through death. In all those instances, the pension administrator will work with you in this journey to make sure that every year and every month of your contributions are kept up to date. The income that was declared in the 18 months period, it's our job to make sure that it has been credited to your account. And therefore, at the end of the financial year, we issue a member statement confirming your assets or your member balance value as at that time. And so therefore, the one under reporting, remember this scheme was established and it came into operationalization from 1st January, from January 2021. And therefore, for those 18 months, some of you could be asking what happened to our period in the past. Just to confirm to you that the regulations and the Act has provided for the safety of your service in the past. That is the service to 1st January 2021. It is well preserved in the old scheme for those members who were members of the old scheme under Cap 189. And therefore, those benefits, in the event of you leaving, they will be paid to you at the point of leaving, both into the scheme, such that then, just to confirm to you that nothing is lost, in case you haven't seen that in your member statement. The pension scheme you are in under the PSSS Act is called a pension scheme, meaning on retirement, you will get 1/3 of your savings as what you've saved as a cash lump sum, and 2/3 will be paid to you as a monthly pension, in retirement. So therefore, all that cumulatively, what is important is the contributions are kept up to date. Of course, as much as possible, the fund manager, together with the advice of the trustees, is to make sure that the returns are optimized such that then you are able to get a good return. And therefore, this is a departure from the past, but what is important is that on retirement, you will be getting a monthly pension which will be paid in what's called either in form of an annuity, that's a monthly regular pension which is purchased from an insurance company, or from what's called an income drawdown, which will be maintained by the scheme. In the event of early exit, the same we've mentioned, so long as you've qualified for the benefits, those benefits will be paid to you. Currently, they are capped. If you leave before normal retirement age, it's just 50% of your savings, both employee and employer, will be paid to you. and the balance will be retained in the scheme and will be paid to you on retirement in line with the rules of the scheme. Okay? So, next please. And so therefore then, in the event of death, the scheme provides that your beneficiaries, whom you will have nominated at the onset of you joining the scheme, your beneficiaries will be paid what has accumulated in the scheme, as well as a life assurance benefit, which is paid by the scheme. That will be paid to you as a multiple of 5 times your annual pensionable salary. That is what is paid. Just to note that your contributions into the scheme at the onset were basically in line with the provisions in the Act, were provided that in year 1 of the scheme, they were at 2.5% of your salary. That was in 2021. In 2022, that was graduated to 5%. And in 2023, it now settled at 7.5%. So that's what you've been contributing. And the employer, with the government of Kenya, has been matching at 15% year on year. So that is now, we are now at, going forward, your contributions into the scheme are set at 7.5% of your basic salary, your contribution, and then the government will make 15%. So all that combined is then put in place. The role of the administrators I've mentioned again is to keep those records every month, such that at the end of the year, we are able to again look at what the accounts have generated in terms of the investment income. Once that investment income has been audited by the trustees, by the auditor, the trustees have adopted the accounts, the income then is distributed to you, and you will be able then to get a statement. So we repeat that process year on year until the member exits the scheme. But we are always available to make sure that we stand with the member in terms of advice whenever circumstances around their lives change. Things like you are supposed to nominate your beneficiaries. It is important that you always keep updating your beneficiaries, because pension benefits largely are paid in line with your wishes in what's called a nomination of beneficiary form, which I'm sure has been shared with you. And we always advise that so long as those circumstances around your life have changed and you want to change your nominated beneficiaries, please always make sure you do that together with the support from the administrator and the secretariat, who are always available to support. Okay. Just finally then to mention that we have a branch network which is available to support you. As an administrator, we have a branch network across the country, 9 branch offices. We work together with the secretariat, and that this information is available, and I'm sure soon you will be able to find it at the Huduma centers, where then you will be able to get all the relevant support that we are able to support you as members. Finally, is just to let you know how to access your statements. We have 2 channels. That is a USSD channel, *378#, which is available to you. If you dial that, you should be able to register and actually access your statement. You will be able to see at least the last 5 contributions which have come in, as well as a consolidated statement. But also, if you log into the website, both at the PSSS and also on our website, you will be able to log in, put in your credentials, and download your statement. All that process has been provided for in the documentation that is available to you. Thank you so much.
Thank you very much. And of course, I saw some people dial that USSD code. Probably you can tell us the experience after this. And now, ladies and gentlemen, Alice Nyariki is a CEO, acting CEO, Public Service Superannuation Scheme. She's going to make a presentation, the report for the Secretariat. Tumpigie makofi.
Chair, the Board of Trustees, members of the Secretariat, members of the scheme, service providers present, all our stakeholders, good afternoon. I'm going to take you through the report of the Secretariat. It's going to be very brief. I will give you the outline. The report is on governance, compliance status, and other operations that we've done within the scheme. Under the governance structure, we have the trustees, as the chair mentioned. We have 9 trustees, and the trustees have been appointed under Section 10. They were appointed 3 months prior to the commencement of the scheme. Then under that, we have the CEO and the management. The management is lean. We are about 20 of us who manage the scheme. We also have service providers whom you've all seen speak to us today. We have the fund manager, we have the custodians, and we have the fund administrator. Our role as Secretariat is to manage the board affairs, manage the scheme affairs on a day-to-day basis. We facilitate the benefit processing and communication for the scheme. We also take member education. We've been doing member education supported by the fund administrator. We do records management for the scheme. We also develop policies for the scheme in liaison with the service providers. And we are the link between the service providers and the trustees. We are also the link between the ministries and the service provider, especially the administrator. So that's majorly our role. And in terms of compliance, we've complied in most aspects of the scheme. The constitution of the Board of Trustees, as I've said, has already been constituted. It was constituted prior to the commencement of the scheme. Largely, that was a big compliance by the government. Then we have the Board of Trustee meetings, which we've complied. The trustees hold their meetings regularly as required by the law. They also have board committees. We have the investment committee, we have the HRM and finance committee, we have the benefits committee, and we also have the audit and risk committee. So these committees support the board, the full board in the business of the board. Appointment of service providers, you've seen we've complied. We have all the service providers on board, and they are assisting the Board of Trustees with the investments and custody and management of scheme affairs. We are also regulated by RBA. We've been registered as a pension scheme, and so we've complied with the registration certificate that we have. We've also registered with the KRA, and with that we've complied, so the members of the scheme are exempted from tax. They have tax exemption, so their pension contributions are not taxed. So largely we've complied. We've also been filing statutory returns as required by the law. We supply the RBA with the reports that they require, and also our sponsor, we give them our reports. So we've complied with that one as well. Then preparation of the audited accounts. The auditor, we've also submitted those audited accounts to RBA. We also have an investment policy statement which guides the investment strategy of the scheme, and this we've also complied as required by the Retirement Benefits Authority. The trustees are required to undergo a certification program, and they've gone through that program, and so we've also complied, and that is the Trustee Development Program. So the trustees have been certified. Remittances to the scheme, the contributions by employer and employees have been remitted to the scheme, and I want to assure members that the small hitch that was there when we were being audited was solved, and the sponsors already remitted those contributions to the scheme. so they are compliant. Good governance policies, we've complied. We've developed policies. We have the risk management policy, we have the code of conduct, we have the board charter, we have the internal and audit risk policy, we have the conflict of interest policy. So we've largely complied with all the requirements that we are supposed to adhere to. Other operations under the scheme, we've been registered, or we've been established as a state corporation under the financial institutions, and we are rated at category 8B. We've been also doing member sensitization. We have, it's continuous, we've been doing it. We've done 3 major ones, 2 of them this year, and 1 last year. We leverage on other institutions. When the institutions are having major activities, we actually go there and talk about PSSS. So largely, we've sensitized quite a number, but we are still doing it. We will continue sensitizing. And next financial year, by August, we are planning other sensitization activities. So we have complied with member education. We have developed a strategic plan, and it's at the tail end. It's about 90% complete. So we believe by the first quarter of the next financial year, we'll be having the financial plan that will guide the scheme activities going forward. Ladies and gentlemen, that marks the end of the management report. And we would like to thank you that you came. And we are excited as PSSS that we have held this first annual general meeting. Asanteni.
Thank you, Acting CEO. The verdict is on compliance is largely compliant. And thank you very much. To represent the Retirement Benefits Authority CEO, Charles Mashira, is Jackson Nguthu. Karibu sana. Tumpigie makofi pia. Some excitement, please. We are about to wind up the program.
The Chair Board of Trustees who are here, service providers, and distinguished members, good afternoon. My name is Jackson Nguthu. I'm the Director in charge of supervision, and I'm representing our CEO, Charles Mashiro, who's not able to come. And I would just want to mention that this is a very good day for us. We have seen the birth of this scheme, the registration, and we have worked together with the Board of Trustees to ensure that the scheme is managed well. We have had sessions with the Board of Trustees to train them to ensure that whatever they do it in accordance with the law, and also to ensure that all the risks which are inherent in the scheme, they are managed. So we have worked together with the Board of Trustees, and I'll confirm that the trustees have done very well. Now, people have been talking about RBA. Who is RBA? RBA is a parastatal under the Minister of National Treasury, charged with the mandate to oversee the pension industry in Kenya. We are supposed to register all schemes in Kenya and supervise what they do. We are also supposed to protect the interests of members like the members who are here and those who have joined us virtually, to ensure that your rights are protected, and also to ensure that the investments are done in the good way. We have registered all the service providers who are here, Gen Africa, all the 3 custodians are registered by us, and also the CPF, who is the administrator. In terms of the compliance of the scheme, I need to confirm that what we have been told is true. Contributions have been remitted, and we have been receiving reports from the service providers, and I need to confirm this. The fund manager sends us a report every quarter. The custodian confirms whether that is true. Also, the administrator sends a report to us on the contributions which have been received. the custodian confirms receipt of those contributions. So these are separation of roles, which is very critical, and we have required that none of the service providers is related to each other to ensure that there's proper protection. And I think this is the assurance we need to give the members that things are being worked on well. We have also ensured that there's proper governance, the trustees are being trained, and they have done very well. To the members, I'd like to thank you for this opportunity of come to this AGM. I would like to require that you look at the documents that have been submitted to you, the accounts. Kindly ensure that you interrogate those numbers because these are about your money. Also, it's important for you when there are opportunities like the issue of the member education, the sensitization, kindly attend those forums. Also, it's important to tell you that this scheme is very different from the other scheme which you moved on from, the one which was operating prior to January of 2021. The benefits payment is done promptly. You'll be paid within 30 days after exit. And I think this is the beauty of this scheme. And I will encourage you guys to continue contributing and also encourage others to join, which have no option to, like the new employees to join the scheme. Finally, I would like to thank the government of Kenya for being faithful to the contribution. We have a challenge of non-remittance of contribution, but the sponsor of this scheme has done very well. They have remitted contributions, and we have seen is that May, we have about 78 billion. It is the second largest scheme after NSSF, and I think in a period of about 3 or 4 years, you'll be the largest scheme. So it is a scheme of interest to us. It's a scheme we have committed our resources to support and ensure that all the required support is provided to the scheme. And more importantly is that members, you need to continue making additional voluntary contributions to take care of your retirement needs, and especially the post-retirement medical needs. And also, finally, we as an authority, we do retirement planning, and we are very happy to partner with the Board of Trustees that whenever you want to have retirement plannings, we'll be able to facilitate. Others, thank you so much. God bless you, and continue saving. You're in the best scheme, and the trustees are doing a good job. The Board of Trustees, the service providers are also doing a good job, and let's continue saving for our retirement. It's our responsibility. God bless you. Thank you.
Thank you, Ngudu. A mark of approval from the Retirement Benefits Authority. Ladies and gentlemen, we are coming to the tail end of this program. George Okioma is a favorite in the program, so I'm asking you back once more to do the presentation on the remuneration of trustees, and then we'll be kind of closing. George.
Thank you once again. I want to confirm to you that in line with the best governance principles and in line with the remuneration policy adopted by all the industry players and as guided by the Retirement Benefits Authority, the Public Service Superannuation Scheme Act number 18 of 2012 under clause 18 provides for remuneration of trustees. That trustees, as they offer their work, that the chairman and the trustees shall be paid such sitting allowance or other remuneration for expenses as the minister may from time to time approve. And I would want to confirm that yes, indeed, during the period they were in office, they received a remuneration of every sitting they held at the rate of 33,000 for the chair per sitting and 28,000 for the members. However, I would want to confirm that under clause 39 of the same act, it provides that the government of Kenya could provide initial grants for purposes of initial takeoff of the scheme, that is to support the scheme. And therefore the government provided those initial funds to relieve the scheme. And so therefore the scheme did not actually pay. Instead, the government of Kenya paid that cost on behalf of the scheme. And I think we want to applaud the government in that respect. Initially, it's good practice when a scheme is starting that the sponsor supports the scheme for those initial expenses, and I want to confirm that the government did actually help relieve the scheme, and it paid that expense on behalf of the scheme. Thank you.
Thank you, Judge. And of course, for confirming that they were paid by the government of the Republic of Kenya. That's why you're going to ask them questions, right? So I want to have about 3 roaming microphones. We are in the Q&A session. So if you have a question, you shoot directly to the person you want to field your question. You shoot, and I'm sure they will shoot up with an answer. So if you have a question, just lift up your hand, and we will give you the opportunity to ask. You shoot your question, then the person you have shot the question to will shoot up with an answer. You have questions? Your members really appear to be very satisfied with the job you're doing. Guys, there's a question? Yeah, go ahead. I'm only going to take 5, so that's the first. Go ahead.
Okay, thank you. My name is George Gibore. I'm a member, but I also represent the clinical officers in the country. My question is regarding page 25, and also in regard to what Georgie has responded, that our trustees are paid by the government. So this shows that the expenses are 0. Does it mean that this scheme never spend anything in terms of administrative costs, sensitization, or any other expenses? Thank you.
That's the question on expenses. I was actually hoping you would ask whether the scheme will support you as you go on strike. Thank you, Gibore. Another question?
I'm already standing.
Okay.
My name's Adam Katana Shahenza. I'm a member of the scheme. Equally, I represent civil members in Nairobi CBD. They are branch secretary in Union of Civil Servants. I have 2 questions. The first question is that I'm happy by this meeting. I'm really delighted because I've learned a lot of things on the same. I'd like to echo my friend who just said that whatever you are contributing is being is very well monitored, and we can get a balance or a mini statement by dialing *378. I've tried dialing it, and indeed, it has brought my balance very fast. And when I try to check my mini statement, I've seen a variance of around 1,000 shillings. Because what is recorded there is 2,200, and on my pay slip, I'm remitting 3,300. So maybe in that category, if it's well explained, I'll appreciate. Number 2 question is that I appreciate the scheme is very convenient, and we are working forward to make sure that we make it better to an extent that it's being paid, I'm told, within 30 days. Once you exit, you have your payment. There are members who have called me, they're telling me that those who are in the scheme, they were contributing the scheme, and by bad luck, their beloved ones died, assuming they were below 45 years. To date, they're still waiting for the payment, yet the scheme pays just within 30 days. If somebody can assist me under that question, will be very much appreciated. Thank you.
Just a moment. Who is deceased in this case? Is it the person who was contributing, or?
The principal.
Okay. The third one, we're taking 5.
My name is Vivian Andai, and I'm a member. According to our last meeting, which we had at the Kenya School of Government, we were told there was the PSS had negotiated for NSSF contribution. There was a certain tier which you were not supposed to contribute. I would like you to clarify which tier is that, And are we still contributing the other tier? The second question, what is the computation for the 2/3 monthly pension that we are supposed to earn after retirement? And then lastly, we have been contributing in the other scheme, the government scheme, until 2021 when we began contributing to this new PSSS. What happens to the former contribution? Is it going to be carried forward to the PSS, or we will be paid, we are supposed to be paid by the former scheme? Thank you.
All right. The fourth person. Do you have? Okay.
Thank you.
Uh-huh.
My name is Francis Ivo from Kupet, Nairobi branch. I have one question, and the other one is just a concern. I'll start with the concern. I'm a member, of course, of the scheme. Most of our members would really want the board to stick to the bond, the treasury bills and bond investment, so that they don't go to other investment like the housing thing by the government. And if they're supposed to go to such kind of investment, maybe they should loan the government, so that at the end of the day, if the house thing does not bring returns, the government will still pay us. We don't invest in investments that will end up making members to have losses. And they have done that before in the circles and in other places. So please, I really requesting you stick to the government bills and the treasury bills and bonds. Then secondly, the issue of the Star 38 thing. It is our wish as the board you liaise with our employers, so that the financial or the members' contribution are found on their payroll. That the amount of money somebody has contributed can easily be seen. The total amount he has contributed can easily be seen, plus the government one can easily be seen on their payslip. And again, at the end of the financial year, of course, there is some interest we have earned. Let that amount also be seen. The interest for each member be seen on their payroll. Thank you.
The last person. Do we have? So I assume by consensus that we don't have. Now we throw it to the speakers to respond to the questions. All right. In no particular order, I think we can respond to the questions asked. They are very genuine concerns. I'm not sure it will take more than 2 minutes, for each response. So who do we start with? Do we start with... I think we start with Obioma. Okay. Gibore.
The expenditure of the scheme, I think, Okema, you can respond to that one. The variance in contributions, also Okeom, your George, and also the prompt payments. Those who have died, they have not been paid, and I think the CEO can also respond.
All right, George, you have a mic?
Thank you. I'll assist George on the first question. That is on page 25 of the financials. I think Ibore was asking whether the expenses were really not incurred. And I'll want to mention to Kibore that, and the general members, is that the reason why you're seeing expenses reading 0 is that George had mentioned about Section 39A of the PSS Act, which provides that in the initial year, the sponsor will be supporting the scheme in terms of expenses. That is the only reason why you've not seen expenses being shouldered by the scheme. So the government of Kenya shouldered expenses during the first year, but definitely going forward, costs related, especially to service providers, the fund manager, custodians, and us as administrators will be paid by the scheme. Thank you.
Thank you. In terms of the other question by Katana, it depends on when you look at star 378, the balances that we have uploaded are only the balances for the period up to 30th June 2022. And so therefore then, if you were to compare your salary in terms of the payslip deduction after that, that may not necessarily be reflected, because remember, the contributions were changing from year 1 of the scheme, that is from 2.5. They changed in year 2 again to 5%, and then now in 2023 at 7.5%. That is for employee contribution. So unless it's a specific one, I look at your payslip, then I'll be able to check, because I don't know which payslip you're looking at, whether it is for this year or last year. So it's good to make sure that you are comparing like with like. But in case of any discrepancy, we are always available to support. In terms of the death gratuity, settlement hasn't been effected. We are aware of the cases which are related to death. Those are issues we are dealing with together with the Secretary, and I'm sure the CEO will comment on that. Remember, a number of employees, except those who were employed from 1st January 2021, had a past service, meaning you were members of the previous scheme. Now, in the event of death, it means that then those contributions have got, that benefit has got to be computed in the old scheme, and then it's paid into the new scheme, and then it is settled. There are some issues around it which we are sorting it out, and I think immediately after we have now finalized this AGM, remember we also needed to update those members who have passed in terms of their contributions as well as their income. We should now be able to start rolling out the payout of those, a number of those exits, which are as a result of death. The question from Andai, NSSF contribution, if you look at the NSSF Act, the last clause, clause 60, this scheme is exempt from tier 2 contributions. Now, NSSF Act came in, it provided that all employees who are working should be compliant in that respect. There is tier 1 and tier 2 contributions. But for purposes of this scheme, there is tier 2 contributions. We may need another session just that we'll be able to explain to you what is tier 1 and tier 2 and how you can be exempted. But I think largely what we are saying is you are exempted from tier 2, and tier 2 is the highest in terms of the number of contribution. In year 1, the statutory contributions under tier 1 is 6% of your salary. That salary is defined under the NSSF Act as 6,000. So when you do 6% of that is 360. Tier 2 is the difference between that salary and actually the salary which has been gazetted. So that contribution is around 720, and that 720 is what's supposed to go into your tier 2. Instead of going to tier 2, that contribution goes into your PSSS scheme. So that exemption has been provided for under this act, under clause 60, that members who are members of the PSSS scheme are exempt from tier 2. As to whether then you are supposed to contribute to tier 1, perhaps the CEO will comment on that, how that is supposed to work. But for now, those are how they will receive their contributions. What happens to former contributions? Unless these were contributions which you did under the PSSS Act, those contributions definitely will be transferred. But if there were contributions as a result of those who are members under CAP 189, the old scheme, I'm sure they will be treated as such. But what is important is that the service under the old scheme, those benefits will be computed and they will be transferred into the scheme and will be paid to you at the point of you leaving or at the point of you retiring. And you will clearly see the benefit from the old scheme and the benefits under the PSSS scheme. The question from Francis the assurance in terms of that we will not invest this money in the housing. Investments in our pension scheme, as my colleague Steve Biko mentioned, and the way they are guided by the Retirement Benefits Authority investment guidelines and the investment policy statement of the scheme, they are well provided and well guided. They just don't invest haphazardly. It is well guided with the aim of making sure that the members get a return, and as much as possible there is protection. So please rest assured, Francis, that trustees have taken all measures possible to make sure that your scheme is, is protected, and the members are going to get, and the scheme is actually getting a return favorable to you as much as possible to the best of their ability, together with the trustees that they have put in place. And so they just don't invest anywhere. Even if they were to invest in affordable housing, it could be in a very structured way, not perhaps maybe the way me and you would think about it. But investments in our pension scheme are guided. We are guided on how much we can put in what asset class, be it in property, be it in what we call the stock market or the capital markets, be it in bond market. It is guided and well structured. And that is why we keep monitoring and reporting to the Retirement Benefits Authority. Every quarter, these service providers you see here, they report to the trustees on quarterly basis to confirm that actually all of us are in compliance with that which the scheme has guided us on. Thank you, Chair.
Thank you.
The administration expenses, and the CEO is going to respond to that. There is also the question that the computation. I think there was a question on computation. That is, once we pay the 1/3, what happens to the 2/3? What is the formula? I think it's a question that has been asked many times.
Yes.
So I think George, you respond to that one, as the CEO will respond to the administration expenses.
Thank you, Chair. Sorry, I forgot that one. At the time of you retiring, the scheme provides that what you have saved on retirement, you hit age 60. Assume, for example, you have saved 3 million, just for illustration purpose. Then you will be paid 1/3 of that money, which is 1 million. It will be paid to you cash. But I want to underline that there is a taxation which comes in. Then the 2/3 of that 3 million, which is 2 million, will be paid to you as a monthly pension. So you are asking, how do we get that monthly pension? So that 2 million, we will work together with the member that we get what's called a quotation from an insurance company. That's an option. So we ask them, this member is retired, she's 60 years of age, how much will, for example, insurance company A, which provides what we call annuity products, those are regulated products, how much will you pay this member for life? So they will say, with the 2 million, we will pay that member maybe 21,000 for argument's sake. So that is the amount you will be paid for so long as you are alive. 21,000 will be paid to you. There's an option of buying what's called an escalating annuity, meaning every year it increases by maybe 3 or 5%. So that will be paid to you for as long as you are alive. In the event of your death, what has remained in terms of unutilized benefit will be paid to your nominated beneficiaries. The other option, if we don't buy an insurance that was called an annuity, is that money, the 2 million, will be put in what's called an income drawdown. An income drawdown is a product which has been provided for in the scheme, and your scheme provides for that benefit that it can be paid. It's basically a fund. We put that money in. Instead of us transferring that money to an insurance company, we'll be paying what we call a drawdown. You draw down a portion of that 2 million every month. The balance which remains in the scheme keeps on being invested. After 10 years, then we look at how much has remained in. If you still want to continue with that arrangement, so be it. Or then now, we say, let us buy an annuity. Why we buy an annuity from an insurance company is to also what we buy, we are managing the risk, Chair. The risk that you are also likely to live long. And it's, yeah. From an insurance perspective and from the mathematics associated with that, it's always a risk when a person lives longer than you expect. It's also even to you as a person, meaning that when we will be teaching you about pre-retirement planning, you need to make sure that you provide for yourself, that you are going to live long, and how are you going to finance your life after retirement. So you have a risk that you need to cater for and cost for. So if I'm going to live longer in retirement, maybe 40 years after retirement, who is going to take care of myself? Where am I going to get money for my upkeep? That is why we hedge that risk, or we buy that risk out to an insurance company who will then be able to cushion that risk. As they cushion, they guarantee that they will pay you your 20,000 for as long as you are alive. So those are options we normally will be keeping, educating you on regular basis. But more importantly, for those who will be retiring, we'll be having individualized sessions, Chair, such that then members are able to make an informed decision. Thank you.
Okay, thank you. It's just one question that has not been answered, the administration expenses that are not shown in the financial statements. Remember, in the first year, for the first 18 months, the sponsor continued to fund the expenses of the trustees and the scheme, and so we didn't incur, the sponsor continued to fund the expenses of the trustees and the members in the first 18 months. That is the period under review. So we didn't incur any expense as the scheme. And that's why the scheme expense is not recorded there, because it was 0. Thank you.
Then, absolutely. I actually wanted to say, unless there's any other pressing issue, because there's provided for an email which you can send questions and they'll be answered promptly. That is AGM 2023 at psss@go.go.ke or psssagm at cpf.or.ke. Those 2 emails, you can be able to send in your questions if you have any other pressing matters, and they will be answered by the experts here, because today is a Friday, and I'm sure the Honorable Akelo Misori wants to go to Homa Bay. All right, ladies and gentlemen, at this point, allow me to bring you Trustee Michael Kageka to give us the vote of thanks, of course, as we approach the end. Tumpigie makofi.
Very well, and good afternoon, those of us who are here physically, those who are joining us on virtual links, and those watching us on TV. Now, distinguished guests, respected chairperson and board of the PSSS, representatives of the Retirement Benefit Authority, esteemed members of the Public Service Superannuation Scheme, the Acting Chief Executive Officer of the Public Service Superannuation Scheme, and the management of the scheme, our valued service providers, stakeholders in the pension sector, ladies and gentlemen, on behalf of the Public Service Superannuation Scheme, I stand before you very happy to extend our sincere gratitude and deliver a heartfelt vote of thanks. This annual general meeting has been a remarkable milestone for the scheme, and we deeply appreciate all of you who have contributed to its resounding success. So first and foremost, allow me to very sincerely thank our chief guest, the PS for National Treasury, who had sent us the counterpart in the same ministry, PS Patrick Mohati, and whose statement has been delivered to us by the Vice Chair of the scheme. You do, of course, understand the activities that were with us today and the change of the timings and the reason why, therefore, the statement was delivered through our Vice Chairperson. I do believe that you agree with me that the insightful words and the support that we have received from the National Treasury and Economic Planning have added immense value to our AGM, and therefore we truly are honored by those words that were spoken from our PSS. I would like also to extend our gratitude to the Honorable Cabinet Secretary for the National Treasury and Economic Planning, Professor Jogona Dongo, and the Principal Secretary for the National Treasury, Dr. Chris Kipto, who represent the government of the Republic of Kenya as a scheme sponsor. We have indeed been advised that they underwrote our expenses for the period which was being reported. We therefore thank our sponsor through the National Treasury. Their steadfast support and guidance have been instrumental in the successful incubation and takeoff of the scheme. Our heartfelt appreciation goes to the heads of the respective agencies that form the membership of the Public Service Superannuation Scheme. Your unwavering commitment and support have been the driving force behind our achievements. Special mention must be made of Mr. Amos Gadesha, the Principal Secretary, State Department for Public Service, whose invaluable contributions during the scheme's conceptualization and ongoing commitment in his capacity as the PS responsible for public service are truly commendable. And so is the support we receive from the Minister responsible for public service. We also acknowledge and appreciate the support of the CEO of the Teachers Service Commission, whose substantial membership in the scheme has been of great significance. Our deepest thanks go to the trustees, led by the dedicated chair, Mr. Titus Daboki, the hard-working management team under the leadership of acting CEO, Nyareki, and the facilitators who have played pivotal roles in the running of the scheme and ensuring the success of this inaugural annual general meeting. Your dedication, expertise, and tireless efforts have been fundamental to the event's resounding success, exemplifying your commitment to the best interest of our members, the reason for which this scheme exists. Furthermore, we express our profound appreciation to all the members of the Public Service Superannuation Scheme who have placed their trust on us, the trustees. Your participation, feedback, and unwavering support are invaluable in shaping the future of our scheme. We are deeply grateful for the confidence you have bestowed upon the trustees and all of us, and we remain committed to serving you most diligently. Our gratitude extends to the Retirement Benefits Authority under the exemplary leadership of Mr. Charles Mashira, represented here by Jackson. We acknowledge the authority's oversight and guidance, which have ensured the effective management and regulation of the retirement benefit schemes in our republic. Your commitment to promoting good governance and safeguarding the interests of members is highly appreciated. To our scheme service providers who have all presented in our first AGM, we extend our sincere thanks. Your work has been exceptional during these initial stages of the scheme. The Public Service Superannuation Scheme acknowledges and commends the administrator, CPF, under the leadership of Hosea Kiri, the fund manager, Jan Africa Asset Managers, and thank you, Biko, for your good presentation. The tripartite custodians comprising of Cooperative Bank, NCBA, and Stanbic. We remain thankful to the prefect for the good work you do. Thank you, Janet. Your contributions have been instrumental in the scheme's success. Additionally, we express our gratitude to the wider network of stakeholders, including government agencies, financial institutions, and our other partners who have collaborated with us in their various capacities. The collaboration, shared vision, and support has contributed significantly to the growth and sustainability of the Public Service Superannuation Scheme. Lastly, but certainly not the least, our heartfelt thanks go to the entire team behind the scenes who have worked tirelessly to ensure the seamless organization of this AGM. Your dedication, attention to detail, and unwavering commitment have been pivotal in creating a memorable event for all who have been involved. In conclusion, I want to reiterate our unwavering commitment to working tirelessly for the best interest of our members, and that remains our mantra in the scheme. We work in the best interest of our members. Together, we will continue to build a secure future and contribute to the Kenya Kwanza agenda of social well-being and inclusive growth. Once again, we extend our sincerest appreciation to each and every one of you for your support and for being an integral part of this remarkable journey. May we continue to strive for excellence and make a positive impact on the lives of our members. We thank God for giving us this opportunity to serve and to be served as members in this scheme. And I also thank the MC for conducting this session very well. Thank you all, and may God bless you. May God bless our good republic. Asante.
Thank you, Trustee Michael Kagika, EBS. I also want us to appreciate the TSC choir for holding us down. Let's appreciate them for a wonderful job, as well as our police officers there. I mean, it's a wonderful job. Thank you very much. Let's appreciate them once more for a good job. We're coming to the close of the program. My name is John Jacob Kuria. I work for Kenya Broadcasting Corporation as a news anchor every Wednesday night and Sunday night. Now, we're about to enjoy some early dinner courtesy of the Public Service Superannuation Scheme. And that early dinner will be served on the first floor of this building. So to probably usher us out with a prayer, because after that we'll do a photo session, a quick one. Let me invite Abdul Rashid to give us a closing prayer, as well as pray for the food. Where do we have Abdul? Karibu sana. You can give him a mic. You can come to the front. I wish you could be all upstanding as we pray the final prayer before we exit.
Let's pray. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم